Welcome back to Mastering MHA MBA. This is part 1 of 4 in our series on Chapter 7. Chapter 7 covers pricing decisions, customer profitability, and cost management. We are splitting this chapter into 4 shorter videos, so each one focuses on one tight topic. In this part 1 of 4, we cover the foundations of pricing, what drives price, how target costing works, and how value engineering helps you hit a target cost. This video is adapted from Datar and Rajan, Managerial Accounting, Making Decisions and Motivating Performance, published by Pearson Education. Here are the 3 objectives we cover in part 1 of 4. First, the 3 major factors that affect pricing decisions. Second, how companies make long-run pricing decisions. Third, pricing using the target costing approach, including value engineering. Let us get started. Picture a hospital setting the price for an MRI scan. Patients, insurers, and competing imaging centers all shape the decision. Some centers offer low-cost scans to pull in volume. Others offer premium packages with shorter wait times and newer technology. Set the price too high and you lose patients. Set it too low and you cannot cover the cost of running the machine. This tension sits at the heart of every pricing decision. 3 forces shape every pricing decision. Customers influence demand. What they are willing to pay depends on the features and quality of the product. Competitors influence price through substitutes and their own pricing strategies. If a rival cuts its price, your customers may switch. Costs influence supply. A firm will produce more units when price covers cost and leaves a margin. Demand and supply together determine the market price. Managers must weigh all 3 factors. No single factor sets the final number. Long-run pricing is a strategic decision. It looks at all future variable and fixed costs. The goal is a stable price that earns a target return on investment over time. There are 2 main approaches. The market-based approach starts with the price and manages cost to fit. The cost-based approach starts with cost and adds a markup. Most companies use some blend of the 2. Market-based pricing begins with the customer. Managers ask what customers will pay, what substitutes exist, and how price-sensitive demand is. This approach is common in healthcare, retail, and hospitality. Target pricing is the main market-based method. A target price is the estimated price customers are willing to pay for the product. It is based on perceived value and expected competitor reactions. From that price, managers derive a target cost. Target cost per unit equals target price minus target operating income per unit. This target cost then becomes the goal the design and production teams have to meet. To hit a target cost, managers use value engineering. Value engineering is a systematic review of the entire value chain. The goal is to cut cost without reducing customer satisfaction. It looks at design, production, distribution, and service together. A key step is separating costs into 2 groups. Value-added costs raise perceived value for the customer, like direct materials in a product. Non-value-added costs add expense without adding value, like rework or unnecessary paperwork. Eliminating non-value-added costs does not hurt the customer. Take IKEA as an example. IKEA designers start with a target retail price. They then work backward through materials, flat pack shipping, and store layout. Most of the cost management happens before a single product is built. Quick recap of part 1 of 4. Price reflects customers, competitors, and costs working together. Long-run pricing aims for a stable price that earns a target return. Target costing works backward from market price. Value engineering is the toolkit that makes target costing real. In part 2 of 4, we go deeper into cost management. We cover cost incurrence, locked-in costs, and the cost-plus pricing approach. These are the tools that connect early design decisions to long-run profitability. This video is adapted from Datar and Rajan, Managerial Accounting, Pearson Education. All rights belong to the original authors and publisher. Thanks for watching. Please like, share, and subscribe to Mastering MHA, MBA for more graduate level accounting content.